a really influential factor in what determines their kind of longevity and their value appreciation, et cetera, is the people that hold those NFTs. So looking at the holders of different collections and of different communities, the other things they hold, their general trading behavior, their reputation, all of these factor into the likelihood of an NFT collection being legitimate and having longevity. So I think that comes almost before anything. I think a lot of the time when people have made a decision what collection they want to, or collections they want to start buying from, they get really hung up on seemingly useful metrics, but generally not as useful as they're made out to be. Namely, rarity is often like really over-indexed by new traders in the space and people interacting with NFT markets. Just because something is rare doesn't mean it's a grail of a collection. And there's a saying that we like to follow when trading: if it's not a grail, it's a floor.
You're listening to the Web3 Creators Podcast, where we speak to the brightest minds and builders in crypto, DeFi, NFTs, and the metaverse. Our goal is to give you the absolute best tools for building a thriving business in the Web3 space. Now, here's your host, Hernan Arber. Let's start creating.
Creators, welcome back to a brand new episode of the Web3 Creators Podcast. Today, we're going to discuss financial markets and unlocking DeFi capabilities for NFTs, and if that's possible. For that, we're going to bring on none less than Nick Emmons, founder at Upshot. How are you, Nick?
Good. Thanks for having me.
Thanks for being here. We have to give a shout out first and foremost to the friend who connected us, Carson. They're doing something like Kitcaster because that's how we made our connection. So it's worth giving them a shout out. So thanks, Carson, for reaching out and for connecting us. And let's get a bit into your story. You look quite young for founder. How old are you?
I'm 26.
26, and you're already running a well-funded company.
Mm-hmm.
So how did that come to be? Give us your background.
Yeah. So I founded Upshot about 2-ish years ago. We've been working on a number of things around like valuing NFTs and building financial infrastructure for NFTs. But before Upshot, what I was doing was leading blockchain development at John Hancock and Manulife. These are two very large asset managers, insurance companies in the US and Canada and some other parts of the world. So we were building some like decentralized insurance applications and protocols there prior to starting Upshot.
How do you decentralize insurance? Is it something like the concept behind Lemonade, that everyone kind of plunges in with their insurance money, and then if somebody needs to get paid, they take from the treasury that everyone paid their insurance from?
Yeah, that's one aspect of it. In a more general sense, what we were trying to do was sort of redesign the core functions of insurance to be able to function without a central company kind of coordinating across them. So actuarial science, the sort of like process of pricing insurance policies and pricing risk right now happens within the insurance company, but there are experts across a number of different fields, and people can leverage data in different ways to differing levels of effectiveness to price risk just as well as an insurance company can. And so if you decentralize the actuarial process, for example, you start to unlock this decentralized network of kind of risk assessors. And with that, you can build more efficient insurance processes. And you can do that with the other kind of core functions of insurance, in constructing insurance or portfolios of insurance policies, in verifying claims of insurance policies, stuff like that. These can all be decentralized and run by a decentralized network.
How do you decentralize? I understand decentralizing the risk assessment, because that's kind of, a lot of people can do it from any point kind of with their expertise and knowledge. But how do you decentralize the actual the claims and the whole like insurance claiming process? People need someone to take them by the hand through the process and stuff.
Yeah, that's definitely the hardest one to decentralize, and that's where like a lot of the beginnings of Upshot came from is trying to solve that problem more so than any of the others. And it does depend on the type of insurance you're offering. Some insurances or some types of risk just like have more sensitive information tied to them. Some require people on the ground to examine the sort of nuances of a claim to ensure that it's not fraudulent, to ensure that it's valid, stuff like that. But there's a lot of more like long tail risk products that one could offer that can be governed and can kind of be validated by a more decentralized network of claims assessors, and that's part of what we were trying to do is
Mhm.
identify these long tail markets that large insurance institutions can't accommodate with their existing structure, and kind of modes of operation, and enable them to exist via decentralized coordination mechanisms.
Sounds super cool. What were you doing before John Hancock?
I was just doing some computer programming, honestly, just kind of figuring out what I wanted to do with my life. I
But no
was,
official kind of engineering school process like I did, because of the whole society was in a different place back when I got my college studies.
yeah, no college. I taught myself how to code and was doing that kind of independently. I was doing some like bigger contracts as well at the time, but
Was it?
was
Did
kind
you
of.
learn? Did you taught yourself like the whole full stack, like Node.js, JavaScript, smart contracts, Solidity, the whole thing?
Yeah. I can code the entire stack. Yeah, I find a lot of my preference being like in the kind of smart contract side of things, back end side of things, more recently. But yeah, full stack was kind of the focus.
Was that your first, like your first step into developing Upshot, was actually coding the thing and then kind of entering this type of CEO role? Or were you just, this is going to be a business that I build, I have the structure, but I'm going to bring in a technical founder to code it up and I'm going to do the business side of things? How did it evolve?
It kind of evolved into the latter, but began as the former. My co-founder and I, he was at John Hancock with me as well. We sort of designed the kind of mechanisms that were going to kind of power the protocol we were building, and then began to build it ourselves. And as the company scaled, as we started to grow the team more and more, I just kind of naturally had to step out of the kind of hands-on day-to-day engineer into more of like a higher level kind of CEO. I still do coding here and there, but I have less time to do it now.
Yeah, of course. So it's good that you still have your eyes on the repository.
That's
so
right. That's right.
so you were doing insurance, which is no offense, but super boring. And then you were getting into
hmm
NFTs, which is like the exciting part. So you were kind of
hmm
getting into NFTs, and then they oh look at the excitement here. We're doing insurance here, but you know NFTs are going like crazy. One was that aha moment when you understood that this NFT thing is gonna like either take off, or it's better to get a hold of it fast.
Yeah, so we were building out this like really general purpose kind of. We called it a subjective consensus mechanism, but it was essentially a protocol to incentivize people in a decentralized network to come to
That's a
agreement
weird
on.
that's a weird name. Subjective consensus algorithm? Because if it's
Yeah,
subjective, how is it consensus?
Yeah, that's what we were trying to solve. And it was motivated a lot by the problems in building out decentralized insurance systems.
Mhm.
Because like if you ask you and me, if someone were to ask us the some subjective question, is this thing valid or not? Is what is the value of this JPEG? Any sort of subjective question. It's often the best route for us to either put in no effort to provide an answer, or to collude to provide an answer that benefits our own interests instead of representing sort of the honesty or the kind of honest situation. And there's this new field of mechanism design called peer prediction that we started to tap into that focuses on building out incentive systems that kind of maximize rewards to participants, to people answering questions when they are being honest in providing those answers. And it kind of borrows some tricks from information theory and mechanism design to assess the correlation between people's answers to questions, as opposed to having some ground truth that can be kind of accessed or plugged into to verify the quality of different responses. And on the back of that, you can start to build these really interesting kind of esoteric protocols that people can ask subjective questions to and get somewhat kind of informative, honest answers out of.
So in summary, it's a convoluted polygraph.
Kind of, yeah, but without any centralized. We're not checking your sweat or your pulse or anything. You know, it's
Okay.
we're just using the tools we have in building out decentralized protocols to try to incentivize honesty in the face of subjectivity, which is a really, really hard problem space.
Yeah.
But yeah, we were trying to build out this system, that kind of general purpose system for insurance. And we agree, insurance is pretty boring. But there's other kind of complexities in bringing an insurance product to market. One being that there's a bunch of these different parts and these different networks of actors you have to bootstrap that are really complex on their own. And when brought together, that complexity compounds. And then the other reason we decided to think of a different go-to-market from insurance initially is the crypto space is full of people that don't really value insurance. These are people depositing huge sums of money into highly risky assets or instruments on a daily basis. That may be a kind of hyperbolic statement, but in general, the crypto audience isn't the ideal demographic to bring an insurance product for. So we were thinking about
There was a
different.
way back then. Let me think. I think it was the coin was BMI. If you remember, there were some decentralized kind of decentralized insurance products that got like a hype wave, lasted for 2-3 months. Like, oh, the institutions are going to need insurance, and these guys are going to provide them a decentralized trustless insurance on the blockchain, and they kind of faded away, and now no one mentions it.
I think insurance makes a lot of sense for like decentralized technology. I know Nexus Mutual is a really interesting product, and they've had success to date. There's a number of different insurance products. I think there's a bunch of complexity to building a robust insurance system, especially as you start to get into more of like the long tail of risks and the non-parametric types of insurance. They become really difficult to accommodate, and so and insurance requires like somewhat specialized skill sets to function properly in more complex risk spaces. And so I think insurance
has a lot to do with also like regulation and stuff, right? Because
it has a lot to do with regulation. Has a lot to do with regulation. Like insurance is kind of more of a victim than other like verticals to information asymmetry and the effect like information I have on something can have on sort of the downsides of others. So it's a really complex product in short. And I think it's a ways out before insurance becomes a really like comprehensive field in the crypto space. And for those reasons, when we were building out sort of the initial version of this subjective consensus mechanism, when we first started Upshot, we were trying to rethink what the go-to-market was away from insurance. We had this crowdsourcing tool that would take in inputs from people, take in questions, and honest answers will get spit out. And this was around July of 2020. So this is before the NFT hype cycle really kicked off. But we saw the very early signs of like attention forming around the NFT space. And the NFTs have been something that we've been interested in since kind of the beginning of NFTs. And we anticipated
How did you notice? What was your kind of your first NFT project that got you like, brought the spark and light up the spark?
Yeah, I think like in the early days, like CryptoPunks and CryptoKitties and those types of projects were really interesting. Those were obviously in 2017, though. We were tracking the space pretty closely, the NFT space specifically pretty closely in 2020 as we were like thinking of bringing our product to market. And it's difficult to sort of define, but there was a bull market coming. There was DeFi summer that we were just getting out of, or that we were in the midst of, and attention started to kind of spill over the walls of DeFi into other parts of the crypto space, and NFTs were a kind of like beneficiary of that. People made all this money in DeFi, and they had to put that money somewhere, and NFTs are a lot of fun to degen into,
Yeah.
And so we kind of anticipated this hype cycle around NFTs, and more especially anticipated this issue we were going to see with NFTs around price discovery, illiquid markets for NFTs. Like, it's just difficult to price these things because they don't change hands very often. And it's that transfer of ownership that is the sort of price discovery event that powers like valuations in more fungible or liquid markets. It just doesn't happen enough with NFTs for that to be the sole means of pricing them. And you can draw these pretty clean analogies between NFTs and things in the traditional world, like real estate and physical art, which are, again, these things that don't change hands very often. They're non-fungible, and they are supplemented quite heavily in their price discovery with appraisals. And so we thought, we have this crowdsourcing technology, we have this crowdsourcing platform. Let's build out crowdsourced appraisals for NFTs. So we built a kind of initial product. It felt a bit like Hot or Not for NFTs. People would come in, they would weigh in on the valuation of different NFTs and get rewarded based on kind of how accurate they were, as deemed by this scoring system.
Were they just saying
And
it
then,
should be it's undervalued or overvalued, or they had to put like an estimated price that they think?
yeah, that's the difficult thing when crowdsourcing this stuff. You have to kind of approximate the questions. So users would be given two NFTs and asked which one is more valuable, and then you sort of play this Hot or Not or face mash game where
Just by
you,
the kind of the artistic, just the image of the NFT.
yeah, you'd have access to some of the metadata as well. The traits are really important when valuing NFTs, but yeah, you'd be given these two NFTs and asked to answer which one is more valuable. And then you start to build out this relative ranking of NFTs by which you can start to infer the value as you get updated sale prices for any of the any of the NFTs on that spectrum or in that ranking. And so that was kind of the idea for the V1. Let's build a crowdsourced tool for pricing NFTs. And that's kind of how we went from insurance to NFTs. I know a long-winded answer, but I'm happy to go
No,
further into how we got to today. But
that's a great that's great transition. And why the name Upshot?
yeah, Upshot has been the name since the beginning. Upshot, the definition of Upshot is like a summary of things. A common phrase being like, "What's the upshot of something?" Meaning like, so what's kind of what does this
The bottom
mean? What's the
line.
point? Yeah, exactly. And that's what we were trying to build, like a subjective consensus mechanism. Like, given
There's a word
subjective
for that in
questions.
Hebrew. It's called tachlis. Tachlis is like
Oh,
down to the point. You know, the nitty gritty. It's
nice.
that they do like this. It's like a tachlis. Like, but give me the upshot, right?
Hmm. Yeah, yeah. Maybe we'll name the next company that. That's pretty good. I like that word too.
Yeah. So you started giving people a tool that would give them an estimated appraisal of the value of their NFTs or any other collection for that matter. Was that how you guys got started?
Yeah. So what we tried to we tried to take this like subjective consensus mechanism crowdsourcing platform and use it on its own in pricing NFTs and making these appraisals or real-time price feeds for NFTs. But we
Mhm.
quickly ran into two problems, like human appraisers having people provide these crowdsourced answers are like human appraisers are both inaccurate. Like, you have to ask these highly approximative questions. You can't just say,
They
what
can
is
be
the value
botted
of
too,
this?
right? They
Yeah,
can be kind
yeah.
of manipulated, let's say.
Mhm. For sure. Yeah. And the other issue is the scalability of how many things they can answer. You can only answer so many questions as sort of a human clicking on an interface. And so very quickly after that initial version, we shifted our focus to building out kind of novel ML models for pricing NFTs. And this sort
Mhm.
of gets around those two problems. ML models can price tons of NFTs in a really short period of time, and they can do so pretty accurately. And so we've spent a while building out several iterations of these models, and now we're pricing around 100 million NFTs on a kind of sub-hourly basis with
Wow.
industry-leading accuracy, within like 3 to 10% error bounds on the median for our best performing collections.
Where are you getting your price feeds from? Is this OpenSea, or are you getting from different marketplaces?
Yeah, so we aggregate from a bunch of different marketplaces. We use several data providers such as Reservoir, Simple Hash, etc., in helping to further like create a robust kind of image of market data, metadata, traits, etc. And these all get fed into our ML models, which spit out kind of accurate appraisals per NFT um, every hour, or kind of a little bit less than every hour.
Mhm. To develop a machine learning algorithm that takes those price feeds, and you have to develop kind of a model, right?
Mhm.
So that model has to say, okay, after you got to this appraisal and you estimated this price point, now you have to now you need a parameter to evaluate it, and it says yes, you were on point, you were slightly over, you were slightly under, and then correct and learn from that, right?
Mhm.
What was that feedback that you had to know if you had a good appraisal? Was it the next purchase or the next 10 purchase, or how did you get that feedback?
Yeah, that's exactly right. So you put together this sort of time series of appraisals, and then you overlay them to the time series of actual sales that happened, and you say for this appraisal, how far off was it from the next sale that occurred, the closest next sale, and then this percentage difference is your error bound essentially, and then the way you aggregate sort of the total performance of your appraisal is calculating this in the median. So it's a metric referred to as the median absolute percentage error. It's quite commonly used in statistics and machine learning to kind of assess the accuracy of different outputs in time series data sets. And um, on the median is like where we're grading a lot of our accuracy. Like half the time we're off by this amount,
Mhm.
and we're generally emitting like 3 to 10% error bounds on our mapes on our best performing collections, which is industry leading, and like as accurate as you can get as far as I'm concerned when it comes to evaluating these types of assets.
Mhm. And did you guys manage to identify like rug pulls before they happen? Like saying, okay, this collection seems to be, founders seem to be dumping, or did you have some kind of alerts for that in the system, or?
Yeah, so we're doing a number of we've expanded like fairly significantly, like beyond appraisals, because appraisals are like only one piece of the puzzle. We've developed another kind of like kind of scoring index called GMI. It's how we score different wallets in the NFT space based on a number of different metrics, and this is like generally a
Of course,
useful
it's the
indicator
GM.
into.
It's a GM index. How many times
Yeah,
people say
exactly. Yeah,
GM in the Discord? It's a GMI because it's a GM index, and that indicates
yeah,
how well how GM'd is the community.
yeah. It's yeah how likely they are that they're going to make it. Um, and yeah, like assessing this at the collection level and seeing like the holders of a collection, if they have high GMIs, that's a useful indicator there. We're doing some more advanced kind of graph analyses now with community detection and like inferences of reputation of different holders of different collections that can all be really useful sort of
Of
indicators
course.
if you're entering like a collection that has longevity, or if a collection that is full of people that are known to rug pull, or kind of I don't know,
That would be
scam
super.
their
I think
holders.
it's super valuable. If you can manage to protect people from getting into a project that is most likely a rug. Are you guys working only with collections that are already trading in an active marketplace, or are you able to also predict, like, for example, what upcoming mints are the most kind of hyped up, attractive, likely to raise in value and that stuff?
Yeah, that's where a lot of this community detection kind of reputation stuff fits in. To date, our models themselves have been use sales data as the core input of assessing their accuracy and making predictions. So with those alone, we've been focused on kind of existing collections after they've traded on the open market for some period of time. But as we start to like build up these kind of multi-dimensional perspectives on different wallets and how sort of influential they are in increasing the price of different collections they buy NFTs from, or how likely they are to decrease the value of different collections they're buying NFTs from, we can start to infer kind of how collections are going to do far earlier in their life cycle, and ideally even prior to mint, by using some more categorical indicators or heuristic indicators as to like the direction they're likely to move in. If for example, if art is kind of the meta right now, if one of one art is what people are interested in, we can start to infer just based off of this kind of like thematic trend in the NFT space, alongside some other inputs, whether or not a one of one collection or a new one of one is going to appreciate in value versus a PFP collection or a generative art piece with many additions or something like that.
I imagine that you also take into account like whales, wallets, actions, moving transactions, large sales, or large holders of a specific collection. Does that get taken into account, I guess?
Yeah, that all gets taken into account. Not only is that stuff an input into some of the like GMI score and some of these other wallet analytics, but we have like we've built up a suite of like labels that get tied specifically to people's wallets as well. If someone generally accepts bids, if someone is a blue chip collector, if someone's a whale, if someone is known to generally sell at a loss, stuff like that.
You taking this NFT thing very seriously, Nick.
I take the NFT thing very seriously. It's all I think about.
That's good. That's great. That's great, because it looks like you guys are building a lot of value for the users. So now, yeah, I don't think you would have gotten to where you are with Upshot if you're not kind of providing significant value to your users and customers. So guide me in through the process. I am an NFT advocate, have my collections, I have my NFTs, some I treasure, some they're just I'm bag holding, and some I just forgot about. How do I come into Upshot and get value kind of right away, or with my first use case? Drive me through that process.
Yeah, there's a bunch of things you can do. So if you want to just check on your portfolio and like the NFTs you own, a really difficult thing to date has been like actually understanding the value of the NFTs you hold in an up-to-date fashion, because these things only get repriced when you sell them, and presumably you're buying these NFTs to hold them for a long period of time. So if you want to get an up-to-date view of the value of the NFTs you own, Upshot enables that really easily. It has a portfolio tracker built into the kind of web app experience, the end user experience. You can see what your NFTs are, and the value of all of them are updated quite frequently. And so you can get this up-to-date view of what your holdings are actually worth. Another thing you can do is if you're looking to buy new NFTs, we have really nice kind of experiences and interactions for finding the best deals in the space. So if NFTs are listed at a price that is actually below their appraisal, we bring these to the kind of top of your feed, the top of the available NFTs per collection, and make it really easy for you to find these deals and to purchase these underpriced items. And same on the selling side. So you can sell your NFTs instantly against the open liquidity in the space based on whether or not a bid's coming in that is actually above the appraisal, and if you can sell it at a good price at any point in time. There's a number of like aggregator-ish kind of market, like exchange type operations you can do with Upshot like that. And now what a lot of our focus is in moving up this financial stack for NFTs and supporting kind of more exotic or advanced types of financial interactions. So actually like allowing people to easily lend against their NFT and get terms that are powered by our appraisals for their loans, or to provide liquidity to the NFT space and earn yield off of being a market maker in the NFT space, or to get exposure to broad baskets of NFT assets with indices that we're launching. So we're trying to like move up this DeFi X NFT stack in powering a bunch of the really kind of interesting, more exotic derivative type NFT interactions.
So you're telling me that if I have an NFT and I want to sell or I want to get some liquidity, I actually don't have to list it at the floor price in order to sell it. Like, is there a kind of a what would be an appraisal that if I'd say, listen, I want to, I want to sell it fast, but you and can can Upshot tell me you can list it above the floor and it will get bid on? How do you guys get to that?
Yeah, that's like it's there's like a little bit more that goes into it than that, but yeah, that's like a decent summary of what's happening. Our what
Mhm.
we're trying to do is enhance the way people can interact with NFT markets with these appraisals and with these kind of novel metrics we're producing. And so yeah, well,
Mhm.
you can go to Upshot, you can sell instantly against open liquidity, you can list your NFT at the like ideal price for that NFT in that moment based on our appraisals. You can do a number of different kind of more advanced things like that that allow you to make more money or like more efficiently interact with the NFT market.
Mhm. Oh, that's awesome. And how do you guys make money? What's the business model?
Yeah, there's a few. So on the one end, um, we sell a lot of the data we're producing. There's a lot of kind of novel stuff that goes into producing appraisals and these other metrics. So
Mhm.
we operate
Who buys
like
the data? Is it like a consumer subscriptions, or you're selling it to other different kind of NFT trading groups, or what?
yeah, it's a number of different platforms that are kind of like customers that can benefit from the data. Anything from like NFT marketplaces and helping their consumers or their users interact with NFT markets, to other portfolio trackers or crypto wallets. Um, DeFi X NFT protocols in general. So, like different lending protocols, AMMs in the NFT space, anybody who's building different types of NFT financial infrastructure. And then also just like individual whales, traders, market makers, lenders, like these individuals that are actually interacting with the more advanced aspects of the NFT markets benefit from having a lot of this data as well. So, those all become the sort of like beneficiaries of producing these kind of novel metrics.
How does an AMM, automatic market maker, work on the NFTs? Like, is there like a liquidity pool, or how
Yeah,
does it?
yeah, basically. Yeah, so
What's
you
what's
deposit
an
it.
NFT? What's an NFT liquidity pool? Is it an NFTs on one side and neither in the other? What?
Yeah, basically that. There's a few different ways you can build NFT AMMs, but the ways we've seen to date, like for example, SudoSwap is the most popular NFT AMM to date. It's exactly that. Liquidity providers provide NFTs and ETH or some other token, and then when people want to sell their NFTs, they're depositing their NFT into the pool and getting out that ETH or that token. And when they want to buy
Mhm.
NFTs, they're sending ETH or a token into the pool and getting out the NFT. And these
How does
NFTs are
it? How does
priced
that
along a curve.
AMM? How does it AMM know what to price the next floor at, or the next NFT at? Is it according to number of buys, number of sales, or is it reducing it just by default by 0.01 NFT ETH if the according to the value of the NFT, or how does that go?
Yeah, NFT AMMs are definitely a little bit kind of a bit more bespoke or kind of thrown together than AMMs in the fungible space, like with
Hmm.
Uniswap and Balancer and other AMMs. But it works intuitively the same. You have a curve that says every time an NFT sells, the next NFT is going to cost this much more, or vice versa. If someone's selling NFTs, every other one's going to cost this much less, etc. Um, and that's how things are being priced in the AMM. If I want to buy 10 NFTs, I know the kind of subsequent price of every NFT that I'm purchasing because they're all being priced along some curve defined by the pool.
Nice, nice.
Yeah.
That's a, maybe I think you opened up a brand new awareness space of awareness into NFTs that I didn't have before. So thank you for that. How big is Upshot today? The team.
We're about 34 people right now. We're hiring, so
34
we'll be growing a
people,
bit.
and you were
Yeah.
two people. You were two co-founders in 2020, like
Hmm.
2 years ago, basically.
Yep. Yeah.
Okay, drive us through that process. That's an amazing growth. So how did that
Okay.
happen?
Yeah, I think as we started to move into kind of NFT appraisals and NFT financialization, to my knowledge, we were kind of the first people focused on NFT appraisals, if not the first, one of the first. And so we were able to, I think, guide a lot of the early mind share around how this specific technique for pricing NFTs and creating more liquid markets for NFTs could look and how it could shape up. And I think that
Mhm.
enabled us to partner with some really prolific and large investors in the space, and we're able to kind of
Did you
grow the
raise
team
funds?
substantially.
Were you profitable before you raised money, or did you raise money in order to become profitable and launch your kind of paid offers?
Yeah, that's right. So we've raised money in order to kind of grow at the speed and to the size that we need to succeed, and to kind of achieve the market share that we're attempting to achieve, with the goal and the plan of becoming profitable soon after.
Mhm. What is so? Who are the other players in that space? Because it seems like you guys are are kind of on a league of your own. The amount of kind of it seems like you're kind of trying to make non fungible tokens fungible in a way,
Hmm.
right? Like
Yeah.
bring liquidity.
Hmm. Yeah, so there's been a lot of really exciting kind of innovation and new entrants into the broader category of DeFi X NFTs, and this is everything from like fractionalization protocols where people are fractionalizing their NFTs, turning them into fungible tokens, trying to make them more liquid that way. Different NFT AMMs, NFT lending protocols has been a really kind of exciting space to watch grow over the past 6+ months. um, a number of others. And then within the sort of NFT valuation space, there aren't many players. There's a few others, players like NFT Bank, um, Spiciest, Deep NFT Value, a few others. But for the
Mhm.
most part, that has remained a fairly kind of small part of the broader market from a kind of entrant perspective.
Oh, it does require a lot of deep knowledge into the markets, a deep read into the whole other markets. And can you give us an example of some marketplaces that are using you guys as a appraisal provider, or some marketplaces that you're working with already?
Sure. Yeah. So a really kind of the most prominent NFT lending protocol or platform in NFTFi leverages Upshot appraisals when people are kind of taking out loans against their NFTs. NFTFi is a peer-to-peer kind of lending protocol that is kind of the leader in that space. And so when people are taking out a loan against their NFT, the Upshot appraisal is displayed right there for them to help kind of decide on sound terms for that NFT, how much they should actually be able to extract from a loan against their NFTs, things like that. We're partnering with some new AMMs that are coming online in sort of guiding using our appraisals to guide the bucketing or the development of kind of tranches of NFTs, to sort of fix this issue that has been present in NFTs since inception of most of the liquidity aggregating at the floor. The NFTs are non-fungible assets. There's a large spectrum of different like types of NFTs within a collection. But to date, if you aren't trading at the floor of the NFTs and you don't have one of the top 1% grails of a collection, you're generally going to be taking a steep discount when you go to sell your NFTs. And by using appraisals to try to craft these buckets or tranches, you can start to guide liquidity into the entire kind of spectrum of assets in a collection. So that's how these appraisals are being used in different new AMMs that are launching. Namely, Caviar is one that's kind of pioneering this tranching approach to NFT liquidity, and then a number of others alongside kind of whales or market makers, lenders in the space, kind of individual participants in these markets. These appraisals are quite useful for doing a number of different things.
So let's speak about your personal founder journey a bit. Have you had the chance with this it's being you guys have been growing super fast? Have you had the time to kind of set a culture or define how you go about hiring the type of people that you're bringing in, or how do you, it's like a huge jump from, like, developing full stack all the way to being a founder, and it's a lot of mental shifts that have to happen. So how have you navigated that?
Yeah, it's helpful to have a really strong support system around, both in our investors and the other people that have come onto the team. That's been helpful in sort of crafting a culture and ensuring that like the best people are coming to work with us, and that we have built this kind of team of A players. One thing that's been a bit not difficult, but it has been something to kind of
Challenging.
work through.
Challenging.
Yeah, challenging is this sort of remote work culture that we've all kind of had to move into because of COVID and whatnot. And building a culture, especially when our team is spread out from the west coast of the U.S. to different
Hmm.
parts of Europe. It's sometimes difficult to build these opportunities for like serendipity, collaboration, synchronous kind of events across the company. So that's been something we've been actively trying
Hmm.
to navigate. I think like we've
You
made
have to
strides
you
towards
have to
improving
fly
that.
everyone over for a get together in, Dubai or something.
Exactly. Yeah. We do have pretty fun offsites. So that's what we've been trying to do. We've been trying to like do more things remotely that can bring people together more frequently, but also bring people together because, in my opinion, there is nothing that sort of matches the kind of quality of in-person time and being able to kind of spend some time together as a team and work through things in person. So
Mhm.
that's something we've like paid particular attention to.
Nick,
Yeah.
what's your vision for the NFT space? Like, if you're by the mere definition of what you guys are building, it's obvious that you have a strong belief that the NFTs and the NFT marketplaces are going to be like super significant digital assets for our, digital lives in the future. Um, but do you so do you envision NFTs like trading, like, like any other asset out there, like secondhand cars are being traded, or how do you envision that in the future?
Yeah, I'd say as like a blanket statement, the thing that guides me and the rest of the people at Upshot is this like more grandiose, higher or more ambitious mission of being able to create liquid markets for anything, and that's sort of what drives our day to day and what we prioritize. Our strategy is laying the foundation, building the infrastructure for enabling really illiquid, esoteric, long tail assets to be traded and to kind of have the same set of available kind of interactions or instruments as more fungible or liquid assets. And then as it pertains to like NFTs specifically and more of like the near to midterm, our goal is to help onboard or to help kind of bridge this gap between NFTs and DeFi in a more robust way. And this not only means creating more liquid markets and more robust financial infrastructure for NFTs as they've existed to date, as JPEGs, as PFPs, as generative art, but also starting to um, capture the full value of NFTs when they represent more kind of natively financial assets as well. NFTs
Mhm.
are this incredibly expressive standard that allow us to tokenize anything and bring it on chain. And we believe that when a lot of this exploration begins in kind of the more natively financial use cases for NFTs, that we'll really start to see a tidal wave of experimentation and innovation happening. So that's what
Mhm.
we're really
Mhm.
excited for and trying to contribute to.
Well, that definitely sounds inspiring. Now let's bring some value to both new people in the NFT spaces and NFT founders. Okay, so let's start with new people in NFTs. You have your bag, you have your portfolio of NFTs. You've gone through. I imagine you've gone through your rug pulls. Otherwise, you haven't paid your
Of course, who
tuition fee
hasn't?
yet,
Yeah.
and you probably nailed some good NFTs as well. And you hopefully you've been eating your dog food and using Upshot to establish, which is the best next opportunity. But what would you advise to new people getting into the space, seeing all this barrage of Discord chilling and and buy me NFT and you mint, and then you get them. They're probably brand new to the whole impersonating thing, and it's a hard space to navigate. So, what would you
For
be
sure.
your top advice to new people in this space?
Yeah. Well, besides using Upshot, some advice I would give is I think a really important thing when examining new NFT projects, and a really influential factor in what determines their kind of longevity and their value appreciation, et cetera, is the people that hold those NFTs. So looking at the holders of different collections and of different communities, the other things they hold, their general trading behavior, their reputation, all of these factor into the likelihood of an NFT collection being legitimate and having longevity. So I think that comes almost before anything. I think a lot of the time when people have made a decision what collection they want to, or collections they want to start buying from, they get really hung up on seemingly useful metrics, but generally not as useful as they're made out to be. Namely, rarity is often like really over-indexed by new traders in the space and people interacting with NFT markets. Just because something is rare doesn't mean it's a grail of a collection. And there's a saying that we like to follow when trading: if it's not a grail, it's a floor, which means that if you aren't buying in the top 1% of a collection, if you aren't buying the rarest of the rare, you are buying a floor NFT, and you should buy floor NFTs at floor prices. You don't want to be buying a really rare NFT if it's not in that upper echelon, because you're going to have to suffer a steep discount when it comes time to sell that NFT. The market does not value
Right.
rarity to the degree that
You
rarity
don't
might
believe in
imply.
specific trades that give you a 1 or 2% top 3% rarity on the collection. Those are
There,
meaningless, you say.
there is merit to traits having different value, but they're often not as correlated to rarity as newer people to the space may think. Like,
Mhm.
for example, the hoodie trade of CryptoPunks is one of the more coveted traits of the CryptoPunk collection, but it's not the rarest trait. It just looks cool. Hoodies are like a cool aesthetic
Right.
item, and it's about identifying these like mimetic shelling points, or these like
Mhm.
culturally significant artifacts in the NFTs when you're kind of navigating which NFTs to purchase. That's
So
that's that's probably like
you
right
dropped
off the bat useful.
you dropped a golden knowledge bomb there. So I'm just gonna sum it up for our viewers, which is you want to have a good appraisal of our NFT collection. Look at the people that are holding those NFTs, right? Like
Yep.
that's a super that's a great knowledge bomb. So I wanted to summarize it there. Now let's go into the founders, right? Because you've seen projects go up and go down in value. You're not doing an NFT project per se. You're doing more of an infrastructural project. But we are in this podcast. We get Web3 founders from all the spectrum. What would be your top three advices, tips, or strategies for Web3 builders and founders in the space to reach success or reach growth? Or I think you're at your young age, you have accrued some very valuable lessons along the way. So, what would be your top three?
Yeah, and is this for collection founders, or anyone building in the NFT space, including infrastructure?
Just just founders. Yeah, I think if you dig into your own lessons at building Upshot, that would be
Hmm.
the most valuable. Because if we have all kind of our external view on other types of
Hmm.
projects, but if you dig into your own personal kind of experience, that's gonna be golden for sure.
Yeah, sure. I think one thing that has benefited us more than anything, and there's some other lessons as well, but the kind of top of mind thing is, um, being willing to trust your gut and trust your intuition, even if it's sometimes not immediately the like correct or obvious thing to do. When we shifted our focus from insurance to NFTs in July of 2020, we got a lot of weird looks from our current investors at the time, and just other people in the space. Naturally, it makes sense. Insurance is a huge market. NFTs were kind of a toy market at the time. And just being able to trust our gut in having that focus and having that intuition and being able to shift gears like that paid dividends in the long run, because like NFTs did have this big moment. They did become this really significant category in the crypto space. And if we didn't shift at that time, we would have been behind the ball. And I think there's other instances where we've made these sort of turns and decisions that weren't obvious at the time, but ended up paying dividends down the road. And so I'd say trusting your intuition is a really important thing. I think this can go too far sometimes. I saw a nice tweet the other day, actually, that said something like, it's best to be stubborn but flexible. I don't think you can like trust your intuition to the end. I think sometimes you're wrong, but for the most part, having this sense of trust while still maintaining flexibility is important. I also think it's important to kind of like do what you're best at and stick to what you're best at. I think, and we're victim of this as well. It's very easy to see a bunch of new shiny things and interesting opportunities to pursue, and want to pursue them. And oftentimes those other opportunities are a distraction or are something that you're not the best at. And like where startups have leverage is in being focused and executing on the things that they can truly excel at and be number one at. And so I'd say that's a lesson that we've learned through trial and error over time, and that I think a lot of people learn through trial and error, but is one that we definitely take seriously and are trying to abide by now. That's two, but I think those are like the two main like thematic things.
Like, so follow your gut. That's a huge one. Follow your instincts and double down on your strengths. So focus on what you're good at. Don't We could split it into, follow your strengths and then into, focus on doing one thing good instead of chasing the new shiny objects, because that's a very typical syndrome, especially in Web3. And then we have our golden suggestions and value for the Web3 creators over here. So this has been amazing, Nick. I want to thank you very much for being here. I didn't know what to expect out of an interview, and it's been an amazing episode. You brought in so much knowledge, and it's you're inspiring. You're inspiring figure. So where do people find you? How do people try Upshot? How do we interact?
Yeah, the main place we kind of communicate publicly is via Twitter. People can follow us at Upshot HQ. We have a Discord as well, but the most active place is Twitter. And then people can jump right into the app and start playing with our tools, even building on a lot of our data through our API at upshot.xyz. So, yeah.
Do people have to pay for the usage of the API, or is it like just plug in and get into have a data stream?
Yeah, there is a free tier. So a lot of the fun stuff you can start building with, you can jump into right away. And then some of the more advanced things or higher throughput options is where payment kicks in. But a lot of the fun stuff is still available at the free tier.
Where can people find you specifically, Nick?
Twitter's probably the best place for that too. My Twitter username is Nick_Emmons. So yeah, that's where I tend to hang out.
Nick, this has been amazing. Thank you for being here. I'm very happy that we made the connection. Let's nurture it. Let's maintain it. I think it's gonna be it's gonna be great to bring you guys on for the when you guys are growing, and for the next hopefully bull run, an NFT run. I think it's gonna be super exciting to whenever you notice that the major trend is changing. I want you to ping me up, and we'll set you up with a follow-up interview. What do you say?
Yeah, sounds great. Definitely.
Nick, thanks for being here. Thanks for being on the Web3 Creators Podcast. And everyone, go follow Nick. Go give it Upshot a shot. And yeah, I see you around. Thank you very much.
Yeah, thanks for having me.
Please keep in mind that none of what's said in this podcast should be considered financial advice. You are strongly recommended to do your own research and do not take anything we say in this podcast as a recommendation to buy or sell any assets whatsoever.
Thank you for listening to this episode of the Web3 Creators Podcast. Make sure you follow us on YouTube, Apple, Spotify, and all of your favorite platforms. And if you're serious about building your own Web3 business, head over to web3creatordojo.com and check out our courses. That's web3creatordojo.com. See you soon, creators.